in today's video, we're going to be talking about Oracle stock, and specifically, we're going to talk about why Oracle stock saw such a big price increase, right? And then we're going to talk about why it's seen such a big price decrease here of late. We'll go into the fundamentals of the company, look at some projections as to where, their guidance and analysts are projecting this company to grow here in the, coming quarters. And then we'll also look at the technicals and go over some trade ideas as well. So before we get started, if you could just do me one big favor, and that's like this video, and of course, subscribe to the channel if you enjoy content like this. But with that being said, let's go ahead and jump right into it. So first things first, if you're unaware of what Oracle stock even is, right, or what they do, let's just cover that real quick, right? So they provide database software, cloud infrastructure, and enterprise applications like ERP and HCM. It's best known for its flagship Oracle database, but also offers a wide range of cloud services, hardware, and software solutions for data management, business operations, and development. So a lot, right? A lot to do with technology and where this world is, evolving around. Nonetheless, though, the one thing that's really growing here of recently is their cloud services, right? And there's different services they offer within that, right? But they're seeing substantial growth in that. So if we scroll down a little bit lower, you can see here, database software, they have cloud computing, they have enterprise applications, they go over, the different ones that they have, enterprise resource planning, human capital management, customer experience, supply chain management, like so much that almost every business needs, right? So, they're like the core of what other businesses need to thrive, right? That's what their services are. So that's a good spot to be in. Hardware and then also consulting and support. So, hey, they do a lot, right? That all looks really good. But now let's talk about why the stock was up so much, though, because this company's been around for a long time, and we'll jump into it later. When we look at the, price to earnings of this company, it's still trading at a pretty high forward price to earnings compared to where this company's traded in the past, right? And there's a reason for that, because now they're expecting like massive growth. So with that being said, though, let's go ahead and talk about why the stock has seen such a big price increase. And yes, it's given a lot of that back, but why was it up in the first place, right? Well, a lot of it had to do with, their, AI and their cloud services showing massive growth, right? And then, so that's the AI demand, right? And then they had major contracts, right? Like with OpenAI, as did so many other companies, right? And so this is projecting a lot of future revenues. And then that's where this backlog comes in, right? So you can see that their backlog or their RPO, which is pretty much future contracts, right? So it's like, hey, we signed this contract, we're going to pay you guys, right? But it hasn't hit the books yet. It's like accounts receivable is the best way to put it. That skyrocketed 359%. So that's like revenue that's not yet showing, but it's there. And so because the market's so forward thinking, they're like, okay, well, that's going to hit the books eventually, right? Yeah, this company deserves to trade at a higher valuation. And so that is a big reason of why we saw the company up so much, right? We'll get into some other reasons as well when we dive a little bit deeper, but you can see that their high growth projections, right? So the company issued staggering long-term guidance forecasting OCI revenues to reach $144 billion by fiscal year 2030. So again, just a massive increase from what anyone else was expecting, right? On Wall Street, investors and whatnot. And we talk about this on the channel all the time, right? When a company comes out and gives better guidance than what was expected, you typically see the stock price increase pretty substantially, right? Because the market is forward thinking, okay? And so when they come out and say, hey, we're seeing growth, insane growth for the next 4 or 5 years, well, yeah, that's pretty bullish for the company, right? Hence why we saw, a big increase in the price. And then you got the shift to the cloud model. So, this is a pretty new thing. And we'll jump into the charts and look at some of their different segments, but this is a newer segment for them, and it's growing like crazy compared to the rest of the business. And again, this is part of the reason why the company's been seeing such a big increase in the stock price. Yes, the stock's down a lot right now, but it's still up substantially from where it was, not that long ago. And then so let's just scroll a bit deeper, right? Let's talk about why the stock is down now, right? Why has it been so volatile? Well, there's a few reasons for that. So you have the consumer concentration risk, right? Which is just pretty much saying that, hey, all of our eggs in one basket. It's all in OpenAI, right? Which is great, but hey, what if anything changes there, right? Like if it does, like that could change everything. And that's a little bit of risk, right? Like it's you don't know what's going to happen with OpenAI, right? I mean, they have all kinds of partnerships with so many different companies. And what if it doesn't work out with one company, or what if things aren't as good as expected? It's a risk, right? And then you have the heavy capital expenditures and debt, right? And we'll jump into that when we look at the balance sheets on, when we go into the fundamentals. And this is one thing I'm going to point out when we look at that. And that was one thing that was a little concerning for me when I looked at their balance sheet. I'm like, it's a little tight. And you look in the history in the past, and there's been times where they've had more debt than assets. And that's not necessarily a good thing, right? I mean, if you know what you're doing, you do it right, and it's going to pay off, like, yes, but again, that's a risk. And so, look, this is my opinion on this. Why is the stock down so much right now? It's like a sell the news event, right? Like, they came out with all of this good news. The stock just skyrocketed. They're squeezing out short sellers, like, and retail investors are jumping in, like the momentum's riding, and it just keeps going, right? And we see this all the time. Like, stocks just like, it's like, oh my God, like, what is going on? It's never going to stop going up, right? And then eventually all that hype settles down. People take their profits and the stock sells off, right? And so at this point, the way I look at it is, hey, investors are probably like, this is all great. I think this still looks really good. The company's trading at a very high evaluation, though, compared to what it usually trades at. Let's see what their Q3 earnings are, right? And see if they're still as bullish as they were this time, right? Or, the last earnings report when they came out with all this news in the first place. We see this all the time. Stocks just go crazy insane up. And just as fast as they went up, they come back down, right, to a major support level. And like I said, we're going to jump into the charts and the technicals and go over some trade ideas, because at the end of the day, like, yes, this is looking pretty juicy, but there's a couple things we need to consider if you're looking to trade this company or invest in it, right? Whether it's more of a swing trade, right, you're going to get in, get up, and get out, or whether you're looking at this for the long-term value, okay? Because, again, I mean, it's trading at pretty high evaluations. And when a company is trading at higher valuations, that just means that they need to execute at higher levels, right? And if they make one mistake, the stock could see, substantial decreases in the price. All right, so the first chart we have here is the total revenues, total revenue percent change, and then cost of sales. I always like to put up there just to see, it's one thing to say, hey, you're growing revenues, but are you like spending a lot of money to do so? And so this is one segment. Obviously, we'll look into like their capital expenditures as well. But nonetheless, though, you can see like what's happening here, right? Like, they are expecting to grow revenues pretty rapidly. And that's obviously one reason why the stock has been going up so much. And you can see here too, which is pretty impressive, that, their percent of revenue change is also expected to continue higher. Like, a lot of times what you see with a bigger company, especially Oracle, right? Like, they've been around for a long time. A lot of times what you see though is that, this percent of revenue change might be around 16 or 20, right? And then you'll see that slowly start going down, even though revenues are expected to continue up. This is pretty much just telling me that like rapid growth is expected in this company in the coming years, right? That's what I'm getting out of this. So nonetheless, though, like, this looks really good. The chart, is a staircase up, and it looks like it's only getting started to what is projected, right? And that's why this next earnings report will be something that we really want to look into, right? To see, hey, has things changed? Has the story changed? Are you guys just as bullish? They might come out and say, we're even more bullish than we were last time, right? That's probably going to send the stock soaring again. But nonetheless, let's keep moving on. Next, we have their operating profits, right? And then operating margins. This is like the core of their business. So I always like to look at this. And again, we can also see the projections on this, right? Just like we could on this one, right? Just so you guys know, like, this is May 26, May 27, and May 28. Each quarter can go like this, but if you're a long-term investor, like, that's what I'm looking at, right? Like, what are we looking at year over year, right? Companies go up, they go down, depending on what's going on with all, the economy and tariffs and this and that. And I mean, there's so many moving variables, but hey, nonetheless, we're growing year over year, okay? So back to the operating profit and operating margin. I mean, you can see this again. I mean, this is where we're at right here, right? And then look in 26. I mean, holy smokes, man, that's almost doubling. Like, that's insane growth. Like, for a company like this, I mean, you can just see in the past, right? Like, look at this very modest growth, right? Like, in operating profits, at least, right? Like, not much at all. You can see that the operating margin was increasing a lot, though. We actually took a pretty big dip, and now it's coming back up again. But again, look at the margin. Look at the operating profits, though. Like, expect it to skyrocket. Again, a big reason why we're seeing a big increase in Oracle stock price. All right, and then if we move on to the basic EPS, right, just what they're expecting this to grow to, you can see, again, we're sitting at about $4.40 per share. This is expected to pretty much double in 2 years. Like, not bad, and then just continue up. I mean, look at this. I mean, just like it's, again, it's their cloud services, why things are looking so bullish right now. And then, OpenAI deal and, just the AI segment of their business that seems to be growing, and they're seeing, everything pay off. But again, this is big, right? Like, this is huge. You can see, again, where they've traded in the past, right? Like 3, 3, 4, 7, 2, 5, 3, 2, like nothing crazy. And now look at this. Like, look what's projected. Like, this is abnormal for this company. Again, part of the reason why the stock price has been seeing such a big increase, right? So then moving on, we have the consolidated net income. This was interesting, right? We can't see any projections on this, obviously, but you can see that, like, this is nothing too crazy. Like, their net income was the highest in 21 and then took a huge dip, right? Could be investments, could be this, could be that. It's a lot that goes into that, right? But nonetheless, like, this chart does not look as pretty to me, okay? And I know now they're making a lot of investments with their CapEx, and that's also some of the negative sentiment that investors are feeling with the company and the risk, right? Because when you put in all this money in CapEx and AI and this and that, like, it has to pay off. And if it doesn't, that's like a big 180 for the company, right? So nonetheless, this doesn't look super good. I mean, you can see just here recently, right? I mean, we went down again. So we were on our way back up, and now we're kind of flatlining. Obviously, with the projections of, their operating profits and their gross profits and what that's projected to grow to, yeah, I'm sure this is going to come up. But hey, I would like to see a nicer chart of their net income. This is kind of a bumpy ride, in my opinion. All right, moving on, we have the free cash flow. Once again, not the prettiest chart. Had really good free cash flow and then went really negative here just recently, right? Again, one of the reasons why the stock has been pulling back down again. They're like, okay, this is great. All this future revenue that's being baked into the stock, but one, it hasn't happened yet, right? And two, like, you guys spent a lot of money to do it, right? Like, you put a lot of financial stress on the company. So it better work out, because if it doesn't, that's really bad, right? And so that's where some of the risk comes in and some of, like, the negative sentiment. But again, we look at the charts, like, Oracle's still up. But nonetheless, once again, we are, projected to grow free cash flow pretty substantially and pretty much reach all-time highs of free cash flow by 28. It's a little ways away, though, okay? So, I think this is just how long it's going to take for this to pay off, or at least that's what's being, expected right now. Moving on, total shares outstanding. I'm not going to spend a lot of time on this. I just, this is the chart that you like to see go down like this, right? You like to see the shares be restricted, right? Supply and demand. The less supply, demand stays the same. Stock price goes up. Vice versa. You keep throwing shares onto the market. That's going to dilute shareholder, equity, and that's nothing that any stockholder likes, right? Anytime someone comes out with a public offering, the stock price goes down. Why? Because they're adding more shares and it's diluting the share price, right? So you can see that we are ramping back up here again. We kind of bottomed out here, right? And now we've been slowly working way back up, but hey, we're still down from where we were and nothing too crazy. So, I like this overall. And then moving on to the forward price to earnings, we also spoke about this, right? And then I also have the price to operating cash flow as well. A lot of people like to look at that. But nonetheless, they'll look at where the company's trading now, right? And look at where it's traded in the past. Like, I mean, a 28 forward price to earnings, that's not too bad. I mean, that doesn't really scare me. And then, 26 price to operating cash flow, like, again, not bad, but look where it has been in the past. That's where I'm like, this chart alone, is Oracle stock oversold or undervalued at this point? I don't think so. Not based off of this chart. But obviously with all the hype and what Oracle is coming out and guiding and saying and what they're expecting their growth rates to be for their cloud services and this and that, like, yes, that demands a higher PE ratio. So with that being said, like, this is by no means, I mean, if you look at this chart, right, looking back to 2017, this is the most expensive the stock's ever been based off of this, right? Like, let's put that in perspective. This is where it was trading just recently, though, right? And then you saw this big decline in the stock price, okay? So now, yes, we're getting back to levels where I feel a lot more confident, if you were to start dollar cost averaging down here or taking a position, because this is not a crazy valuation by any stretch of the imagination, assuming Oracle executes. All right, so moving on, this is a breakdown of the different segments, right? Here in the orange, we have their services gross profit. Not a lot, right? Pretty just consistent. Doesn't really, not really doing much at all there. Nothing to be impressed about. Hardware gross profit, same thing here. I mean, this is really nothing to be super impressed about. I mean, you can see this actually just declining. Not super good. And then you got the cloud and license gross profit, right? Their cloud services and all the licenses that they're selling for it, right? This is why the company's growing so much. I mean, look at that chart. Now that's beautiful. That is crazy. I mean, it's just, the amount of growth and just the amount of income or profits they're making off of this compared to what the business was making before of like their core business, I guess you could say, is just a lot, right? I mean, this is awesome. This is what you want to see. Again, no projections here, but you can see where the money's being made, and this is where all the enthusiasm and the hype is coming in, right, with the cloud services. And then the CapEx, we talked about this, another reason why the stock is down. Again, where have they been spending in the past compared to how much they're spending now, right? I mean, this is huge. And a lot of companies are doing this. This is not just Oracle. All your Mag 7s are doing it, right? Like, this is one of the biggest fears behind investors right now. It's just like these companies are spending too much money. Is this actually going to pay off? And or like, are we in an AI bubble, right? Of course, that's another thing. But I want to mention, all the pros and cons. This is a pro if it pays off. But I mean, again, this is the amount. I mean, back in 24 or even 23, right? Like, this seemed like a lot. And then this just seems like nothing at this point compared to how much they're spending now, right? So that's something to keep an eye on, but that's something that a lot of investors are keeping an eye on multiple companies right now, right? Not just Oracle. So wanted to bring that to your attention as well. This was the chart of the remaining performance obligation, or the RPO, right? Again, this is the amount of revenue they have on the books, but has yet to be realized. It's just a matter of time before all this is realized. And I'm pretty sure these people are locked in contracts, right? Like, this is money that the company will get. This is probably the biggest reason why you saw the stock price rise so much, right? Or one of the two big reasons of why the stock price rose so much, because they're just like, oh my God, like, I mean, look at this, right? Look at this chart, and then look at this. This is massive. And again, this is from the OpenAI deal, but they're pretty much just saying, like, we're going to have so much revenue. Like, based off where we've been in the past, like, doesn't even compare. And you can see, I mean, that's what? I think this 356% is what it's up. You have the remaining performance obligations up 359% year over year. In Crane, this represents nearly a 10x increase since fiscal year 2022. All right, and then we have the cloud growth, right? That's up 20%, right? Up 40%, I think, or 44% since fiscal year 20, right? And then forecasted to grow at 16% growth rate into fiscal year 26. So again, I mean, that's nice growth, right? Here you go. This is another big reason why we saw such a big increase in the stock price, right? Multi-cloud database business growth, 1,500% growth rate. Insane. Yes, like, obviously that would cause some hype. You have the internet segment growth growing at 33%. Let's see, we have distributed cloud growth growing at 77%. Cloud native segment growing at 49%. AI infrastructure growth at 117%. Look, this is what it comes down to, okay? The company itself was never really growing. Like, Oracle's been around for a really long time. It's always been a really solid technology company, right? Just with pretty much hitting its maturity, right? Where you're just seeing your average, 8 to 10, 12% growth rate, like nothing crazy, right? Now that they entered into like the cloud service and the AI and all this, right? Now all of a sudden they have a bunch of different segments growing, like I said, like at 33%, at 77%, at 49%, at 117%, 20%. Like, these are massive growth rates, okay? You put all that together, like, the company's expected to grow revenues a ton compared to what it's ever grown in the past, especially when you look at like the RPO and how much that grew. And that's just from the OpenAI deal, pretty much saying, hey, this is revenue that's locked in. We just haven't realized it yet, right? We just have not realized it on our books. Okay, so let's go ahead and jump into the technicals and go over some trade ideas when it comes to Oracle stock. So you can see here I have the daily time frame pulled up. This gives us a good picture of what's been going on with the price action. You can see that we hit lows of, what was this? I mean, this is crazy, right? $120 pretty much. And this was when the whole market was selling off. And since then, from that to its peak, right? So in 140 days, pretty much, the stock saw a 180% increase. sane. And so, yeah, I mean, I know some people are like, oh my God, like it's down so much, like this piece of crap stock. Let's see though, like right now, currently we are down about 40%. So up 180, down 40. We're still up pretty massively. Let's just put things in perspective, okay? So I always like to mention that, because these pullbacks are pretty healthy. And look, this was a good earnings report, right? When they came out, I'm pretty sure this is when they came out a lot with that like OpenAI deal and this and that, and then they came out again with even more news, right? I mean, it was just like, hey, things are looking good, and they continue to look good. Just a ton of hype with all these new announcements coming out and deals being, presented, and they had partnership with AMD and other companies, right? Just like a lot of euphoria over the past, few months or 2 quarters, right? And yeah, I mean, it pretty much gave all that back. So let's look at this though. Look at the bright side, right? Gaps have been filled for the most part. This big gap obviously was filled, and then you got another gap down here. Okay, and it's to argue whether or not we filled that gap. We went into it, right? We definitely didn't get down to the bottom of it or top, whatever you want to call that. But nonetheless, it's to be argued. We could have filled that gap, so that's good, right? Gaps usually get filled. They don't always have to, but they typically do. So hey, went ahead and got that out of the way, right? Let's look at some other factors though. We are oversold on the daily. That's a pretty big time frame. We're also pretty much oversold on the weekly almost too, which is a huge time frame to be oversold on. And so obviously with that being said, we were pretty oversold here on the 4-hour, actually very oversold on the 4-hour for a little while. That doesn't look too bad. But nonetheless though, definitely an oversold territory. Haven't really even seen a bounce since this sell-off here, right? I mean, you can see we usually get these dead count bounces where it would drop like this, right, down to the moving average, and we get this big bounce back up before it sells off, right? So this is what I see happening, right? And some trade ideas. So first of all, again, we filled this gap. This is my buy zone right here, okay? So between 190 and 177, yes, we're trading at 200 now. Maybe it's too late already. It's hard to say. If the market starts to reverse, yeah, this thing could go up. But I also really don't see too much happening before earnings, right? I mean, typically a stock might increase a little bit into earnings, and then depending on how earnings comes out, it continues up, down, sideways, who knows? It's a 50-50 chance at the end of the day. But this is where it just seems really juicy to me. Down between 190 and 177. So yes, if we get back down to here, I'm definitely buying. That's what I'm doing, right? I'm still debating on, just because I don't have a lot of capital right now until I sell some positions, hopefully next week. But I'm looking at even possibly starting to dollar cost average here, assuming all the hype behind this company is legit. Like, I can definitely see us at least bouncing here, minimum, right? And again, we're just talking about trade ideas, okay? So this would be like a swing trade for me. So let's zoom in a little bit, okay? So you can see down here, right? We can't break above this moving average, right? Any of these really, right? We just keep getting rejected. You can see a clear trend line here. So there's a couple ways to play this, right? You can wait until we break above this EMA right here. It's like pretty much like the 50-day EMA, okay? We could break above this and then look to take a position. So this is a reversal forming, okay? You have the sell-off, and we have yet to really get the consolidation yet. And that's what I'm thinking. We'll see, because if the market decides that it's going to skyrocket, this stock's probably going to follow suit. But usually with a reversal, it will sell off like this. We'll get a consolidation where it'll start kind of flatlining, right? And then eventually we'll break above these moving averages, hold, and then continue up, right? That's what you'd be looking for. So again, a couple ways that you can play this. If we zoom in again, this gives us a little bit more of a clear picture. You could start a position here, and you could just put your stop loss under here, right? I mean, it's to argue that it could be under here, but just you decide what your risk tolerance is, right? If you're really looking to get a trade, though, you really want to get in. You don't want to wait. You don't want to miss out, right? Just in case, hey, you can start a position here, right? This is still a good area to start. I mean, we're right at the 300-day moving average. Like, this is typically a good spot to start a position, right? If it keeps going down, it is what it is, but this is typically, history shows that this is a good spot, right, to start at least dollar cost averaging into a position. But If you want, like I said, you could put your stop loss down here, start here. Your risk to reward is like nothing, right? Because if we zoom back out to the 4-hour, actually, the daily, right? This is where I can see us coming back up to this moving average, right? And then I don't know. I mean, I guess that is to be argued. Yeah, you can just see, right? That was a bunch of support. It was resistance here. It was also a big level before we just ripped up and broke above it, right? That's what I'm guessing. Not to mention, if this thing keeps consolidating down here, this 200-day moving average is probably going to fall down closer to this line, right? That will be another level of support at that time. Obviously, these move, depending on how the stock moves. So, nonetheless, though, this is my first level that I'd be looking to take profits. And if we just look at that trade, right, so your downside would be 3-4%, your upside would be 20%. That's not a bad trade, right? Obviously, you could just keep holding it too and look to, go back up to all-time highs. That's completely up to you, right? I'm just giving trade ideas, and I'm telling you what I'm probably going to be doing. I'm probably going to start a small position here. I'm going to hope that it actually comes back down here and completely fills this gap, but we'll see. I think that really has a lot to do with what the market does overall, right? And then going back to, the fundamentals, looking at the PE ratio, right? Like we're not the cheapest that the company's ever been, but if the company's actually growing into the cloud services segment as well as it is, and the projections that they're making, then this company is going to deserve a higher price to earnings ratio, right? A PE ratio. It's gonna deserve to trade at a higher valuation is what I'm getting at. And so with that being said, again, the forward price to earnings, I think it said it was like at like 28, 29, something like that. So hey, again, that doesn't scare me, right? Like if that was at like a 100 or even 50 or 60, I'd be a little bit more concerned, and I'd probably be like, no, let's stay away. Let's let that come down a little bit. So nonetheless, though, guys, you can see here, right, this level that we're trading at, the 300-day, is also a major level of resistance, right? Old resistance becomes new support. This is where I would have always expected the stock to pull back to before it continues higher, right? I think this is, again, a great time to start dollar cost averaging into this company. Oracle's a good company too, man. I mean, they've been around for a long time. They're in an industry that is expected to grow a lot, being like AI and the cloud service, right? Like it's a huge industry. There's so much market share there to grow into. So yeah, I mean, like again, I have no issue getting into this around these levels. Again, if you're looking for lower downside, right? These are the levels that I'm watching and I'm keeping my eyes on. Okay, if we break back below here, I think this is the next level we're going to, around 177 ish. You could probably call that 180. Yeah, 180 is what we'll take it to. I put it down here though because you can see all that price action here, resistance, right? Resistance. It's never gonna be perfect, but 180 is a whole number. So yeah, hey, it could still dip down below a little bit like this, a wick below, get bought back up. That's the next level though, right? If we were to break that level, I don't think it's gonna happen. Not with all the hype behind the company. Because it does look like they have legit sales, right, with the RPO on the books that are just not hit the books yet. This would be the absolute lowest I could see the company going, unless, in the event of a market crash or a recession, then maybe things would be different. And then again, if you're looking to, hey, where should I take profits at, right? Because I have to be honest, like I don't think this is a bad long-term company, but anytime a company gets overvalued in like a PE ratio standpoint, right? Like it starts trading at a high PE ratio, I tend to just like to get out and not risk it, right? Because all it takes is for one thing to go wrong and the company goes down. There is like one exception to this, two exceptions actually, NVIDIA and Palantir. And you just look back at history, right? There's not many stocks that have done that. Yes, okay, Apple, Amazon, like they're, yes, you can pick a handful, right? Like 10, but there's thousands and thousands and thousands of stocks and companies. And so like, yeah, I mean, typically when a company's overvalued like that, it has pullbacks and pretty big pullbacks, as you can see here, right? And so I personally don't like to risk it. I would be looking to take profits here. If you want to hold a bit longer, then, obviously that would probably be my next level. And then if you wanted to go after that, I mean, yeah, then we're just going back to all-time highs pretty much up around here. So those would be the levels that I'd be keeping my eyes on. Again, don't think this is a bad, position to start dollar cost averaging your position and going from there. But if you're looking for like a shorter term trade, again, I would just make sure you put your stop loss in, and it's pretty clear, right? You can put it right there. I feel like if we break that level, then we're probably going to completely fill that gap. That's how I feel, right? So you'll save 5-6%, and you could just get back in around here and then put your stop loss under there, right? That's the idea. But hey, before we hop off here, let's look at some price targets real quick. We have 42 analysts covering this stock. That is pretty substantial. It's a lot of analysts. The majority are strong buy ratings, then buy ratings. There are a good bit of holds and, one or two sells probably, which is the low on the street, right? 175, that's going to come from our sell. And we actually just hit that, right? I mean, we just hit 177, which I like to see, right? Like we just touched down to the analyst low on the street, right? And then we have the mid price at 342, which is back at all-time highs. So yeah, I mean, looking at that, looking at the projections with this is how I feel about this company, right? This is definitely a good company for a long-term investment. I feel like Oracle, they've been around for such a long time. Now that they're growing into the cloud segment and this and that, I think there's plenty of future growth for this company, at least for the next 3 to 5 years. But with that being said, I still think this is a high risk, high reward type of play, just meaning that there's a lot of hype baked into the company and this is what they're projecting, right? But it hasn't actually come to fruition yet. So, there's just with the AI bubble doubts, right? And just the fact that they're spending so much money on CapEx and is it going to pay off and this and that. There's just a lot of moving parts and a lot of things have to fall into place and they have to execute in order for, this stock to really just continue skyrocketing. Nonetheless, though, I do think the reward is a lot higher than the risk at these levels based off of all the new contracts and partnerships that they've entered into and the growing cloud services. Things are looking really good and are looking up for Oracle stock. So yeah, overall, man, I think this is definitely a good investment opportunity. A little bit more risk, a lot more volatile. And that's just something I want you to understand, right? Obviously, this is not financial advice. Please do not copy my trades. Don't do what I'm saying. Do your own due diligence, do your own research before you decide to take a position, right? Because God forbid I'm wrong. I don't want you yelling at me. But this is what I'm thinking. These are my opinions. And then I also presented the facts too, right? We looked at the fundamentals. And so based off of where they're projected to grow, when we look at the fundamentals, based off of the technicals as well, being at the 300-day moving average, being at previous support, being, the fact that we've already entered into my buy zone, obviously you had to be quick to react down there. But, we pretty much filled that gap. I mean, there's just a lot that's oversold. The MACD's oversold too. Looks like we're getting ready to curl back around. Hey, I personally see this thing bouncing minimum, right? Bouncing back up to this moving average. Oh, and I forgot to mention, should you buy Oracle stock before they report their Q3 earnings? Okay, this is my honest opinion, right? I don't think it's ever a good idea to solely buy a stock before earnings, hoping that it skyrockets like it's done in the past, right? So, should you buy before earnings? In my opinion, I think it's best to do half of allocations because I do think that we're at levels based off of everything we just talked about, right? I do think we're at a level where you're safe to start dollar cost averaging into Oracle, but we have no idea. I mean, literally, I've seen companies come out and blow out earnings 1,000 times. They beat, guide higher, like Palantir, right? And NVIDIA just happened, and the stock still goes down, right? And then maybe it goes up not long after, but that just shows that you had an opportunity to buy it even lower, right? And so I always feel like it's best to go, half allocation, meaning let's say you have 10K that you want to put into Oracle stock, just go ahead and put 5 into it now, right? Wait till after earnings to do the rest of your allocation because two or three things are going to happen, right? I mean, either the stock's going to just skyrocket, and if it does, hey, at least you have something in it, right? And then typically, even if that happens, you'll have a pretty decent pullback where you can then add more on that pullback before it goes higher, right? Because if it skyrockets, it's probably because it had great earnings and things are looking up at least for the next, couple months until next earnings report, right? Vice versa, let's say the stock ends up going down, right? They don't have as good of earnings. Well, guess what? Now you still have another 5K on the sidelines that you can dollar cost average and lower your position. And that just definitely feels a lot better and safer because in my opinion, buying before earnings is just straight gambling. Because I could sit here and we could literally predict that we know, like NVIDIA, we knew that they were going to come out and crush it. They've done it every single quarter and the stock still goes down, right? Palantir crushes it like they always do and the stock still went down, right? There's no rhyme or reason how it really works ever. So you can't hope that it's going to go up. And so that's almost always going to be my answer. Should you buy before earnings? Some companies I will say just don't buy, just wait, right? This is one though where I do feel like I'd be comfortable, and I probably will myself. Again, not financial advice, and I have not done this yet. I'm going to see how things play out next week leading up into earnings, but nonetheless, I think this is a good spot to start dollar cost averaging, right? Now, if you're looking for a swing trade, that's where I would say, hey, maybe swing it into earnings, right? Hoping for a push into earnings, and then cut your, take your profits and just say, hey, let's see what happens, right? Because again, you can't really have a stop loss in aftermarket, right? So you got to be like mentally prepared to take that loss, and you've seen how fast these stocks can go up and down, right? So hey, that's my kind of 2 cents on should you buy before earnings, half allocation, half now, half later. My opinion, not financial advice. So hey, I hope you guys found this video helpful. Let me know what you think in the comments, and if you're still here, please consider subscribing to the channel if you have not already, liking this video, and I'll see you guys in the next one.